It's episode number 21 of the Traders Podcast. I am your grateful and appreciative host here and professional trader, Jeremy Ritz. Excited to have you back here for another glorious, splendid, fantastic episode. And today's topic on the podcast is why you must treat your trading and investing like a business. Listen, anytime you're doing something with your hard-earned money, where you're putting it at risk, you're exposing it to risk you can't control, you have to take that very seriously. And I'm going to tell you how I approach treating my trading and investing like in business, and some of these strategies that you can take and use on your own. So I'm excited to get into that topic today. We also have Ask a Trader that we're going to be doing. We're continuing that. And don't forget, we have the weekly Ask a Trader Q&A sessions. That'll be coming up Thursday. This video should be out by then. And then we're also going to take a look at Mr. Roku. So without any further hesitation, in episode number 21, let's go to Ask a Trader. All right, it is time for Ask a Trader. And the first question here, I've got my little notes here in my notebook for this episode. But the first question is, Jeremy, why did GameStop pop, and who in the world is Roaring Kitty? Okay, so if you have been paying attention to the stock market this week, you may have heard about Roaring Kitty, and you heard about meme stocks, and you heard about back in 2021 when retail traders coordinated an effort to conduct a short squeeze, which basically means that a stock that's heavily shorted by massive hedge funds, what happens is these retail traders back in 2021, led by an internet personality known as Roaring Kitty, they bought shares and shares and shares and shares of GameStop to drive that price super high up. And what happened because of that is because these big hedge funds were shorting the stock, they profited as it went down. Well, as these retail traders drove the price up, it forced those hedge funds to buy to close their positions at a loss, which drove the stock up even farther. And so a lot of people made a lot of money on that. There's actually on Netflix, there's a series, I'm trying to think of what it's called. I think it's called Eat the Rich, the GameStop saga. Check that out. It explains everything in detail. And I think there's a movie that they made about it called Dumb Money. But this week, Roaring Kitty, who hasn't posted anything on social media for about 3 years, posted a guy who was sitting back in his chair and then leaning up with a game console. And everybody interpreted that to mean that, hey, buy GameStop. And you saw a massive move. It got up to $80 in pre-market. It has since pulled back down. But it was a bit of a revisit of the meme stock movement that took place back in 2021. So it influenced some other stocks, AMC, and we have yet to see if that's going to hold. As of right now, it's not, but it was fun while it lasted. But yeah, go check that out. Eat the Rich on Netflix or Dumb Money, and just do a Google of Roaring Kitty, and you'll learn all about him. All right. The next question is, Jeremy, what's the hardest thing you had to learn in day trading? And I probably mentioned this before in just a different way, but patience. Patience is the most difficult thing to learn as a trader, because I know for me, I have a tendency to be a bit impulsive and I want it now, right? And so, trying to go too big on a trade, trying to make a year's worth of money on a trade, not sitting in a trade and waiting it out. What I mean by that, let's say that it pulls back and it's a loser really quickly, not sticking it out, waiting for it to retrace and bounce back, or not sitting on a winner long enough and capturing profit. Today, I had a nice trade where I'm really proud of myself. Typically, I would have bounced out way too soon, but I was patient, read the chart, knew that there was more room left on it, and I let it run. So patience is really difficult to learn. And also, too, patience in the sense of with a losing trade, taking the loss and being patient to know that, hey, this isn't a winner, but that winner is going to be coming maybe tomorrow, next week, the next month. So that's the hardest thing that I've learned. And I wouldn't say that I've mastered it, but patience. This is trading and investing is a long-term game. You have to zoom out. If you look at it and you live and die by the day, which I have done, you're going to make yourself miserable. So patience is key in the markets. And then the last question is, what's one area of trading and investing that you want to learn? So I've had this question from a lot of my students, and it's trading futures and cryptocurrency. So I've just made my first investment in Bitcoin maybe about a month ago. So I'm slowly accumulating a position in Bitcoin, but I want to learn how to trade it. So that is definitely something I'm going to be doing. It's a 24-hour, 7-day-a-week market, which is bad for me because I could go down the rabbit hole. But I am going to spend some time learning that and also trading futures, which is a 24-hour market during the week. So definitely going to check that out. So those are two areas that I'm going to spend some time learning this summer. So there you go. Ask a Trader for episode 21. And let's get into our topic today of why you have to treat your trading like a business. And again, like I said at the beginning of the show, that when you're dealing with money, you have to treat it like it's something sacred. You worked for that money and you don't want to just piss it away. Excuse my my bluntness there. But with that in mind, when you're trading your cash, you have to make sure that you are serious. Now, this is fun. I love trading, but I'm not willy-nilly. Oh, hey, let's just do whatever. No. And it starts with having a routine and structure, right? Just like when you would go into your job, or when I used to go into my job, I had a routine of what I would do. I would come into the office, I would check my emails, I would review my to-do list, I would do affirmations to get my mindset ready to go on about my business of helping to improve student learning. And I have a similar process that I follow for trading. Every day I do the same exact thing. I look at the pre-market trading. I'll wake up around 4:30 a.m. Now I don't stay up once I get up, but I'll wake up, check it on my phone, see where things are at, go back to bed. So I at least have an idea before I wake up of how the market's moving. And then around 7, I get on the computer, check out my charts, and get an idea of what are those things I'm looking to trade, my setups for that day. And then when I sit down right before market opens, I'm narrowing down my trade options, what I'm going to do, and I take the trade. And I even put a song on, the same song by Akira the Don and Naval Ravikant, read what you love until you love to read. And that's my trigger, gets me in state to know, all right, here we go. It's time to trade. And then from there, I have a really clearly defined structure. I trade from 9:30 a.m. to 11:30 a.m. and that's it. I actually just finished up my trading session today. And if I have a winning trade that I'm out of before 11:30, I'm done. And I don't just keep trading. I don't overtrade. But I have that structure that I follow and I do it every single day. And when you do something every single day, you become excellent at it, outstanding at it. And that's what you want to do, that repetition. So have that structure, have that same process that you follow every day. And another part of my routine and structure is that when I'm done trading, that's when the studying starts. That's when the preparation starts. And a lot of people think that the most of the time is spent actually trading. That's where the least amount of time is spent. The majority of your time needs to be spent studying charts, reading books, understanding new concepts, reading about the fundamentals of companies, knowing what economic events are going to impact the market. You're studying, your preparation is what's going to make you a good trader. So that needs to be part of your routine as well. The second thing that I strongly advocate for is keeping detailed records of every single trade that you make. And it doesn't have to be a complicated system. I had one of my students who messaged me the other day. He said, Jeremy, can you send me an example of what your trade log looks like? And I said, yeah, here it is right here. It's just a little notebook where I have my entry, my profit taker, and my stop loss. That's it. So, but I have it written down so I can go back and review those trades, which I do, so that I can understand what I'm doing well, would I need to improve? And I also keep track of my daily profit and loss. So for every month, I have an Excel spreadsheet. It's a Google sheet, and I put down what I made or what I lost on that day, so I could tally it up and see my ongoing total. And then I put a column in that shows what I made the previous month, so I can compare it. And I also break it down to know, all right, if I made this much over the course of 252 trading days, that's the equivalent to this type of salary if I was working a job. And knowing that puts things in context and perspective for me to know how successful my day was. And so, again, this is a business. You've got to know your numbers. You got to know, hey, I'm thriving at this. I'm succeeding. I'm excelling. Or, hey, I'm losing money. Maybe this gig isn't for me. So you got to keep detailed records. The other part of treating your trading like a business is following your plan. I go back to the example of me working as a principal. If I did something outside of the vision of my school or my district, or I did something outside of the policies, I could be disciplined. I could be fired, just like somebody else who works in a business. There's a plan that must be followed that's aligned with the values of that organization. The same thing applies to your trading. If you're just doing whatever the hell you want on any given trade, number one, I could tell you you're losing money. Number two, that if you want to make money, you have to follow that plan and be disciplined. So that is key. Your trading plan should be something that you're revising and updating every month, and you follow it to a T. That's the only way you're going to know what you're doing right, what you're doing wrong, and you know what course corrections to make so that you can continue to increase your profitability along the way. And then finally, treating your trading like a business, you're trading and investing like a business. And this kind of ties into that plan. You need to constantly reflect and evaluate your performance, not just from a profit and loss standpoint, but from a reading of charts perspective. How well are you interpreting the data? How well are you understanding how events in the economy are impacting the market? How is your mindset impacting your trading? What are you doing to grow your mindset, enhance your mindset? What are you doing for your well-being and your health? Because that's another part. If you try to trade when you're in a bad, negative mood, mindset, if you're not taking care of yourself physically, it's going to show up in your trading. I know that some of the worst days trading I've ever had is because it's following a stressful event or I didn't sleep well. So you have to stay on top of that. You need to take care of your nutrition. You need to take care of eating healthy. You need to exercise. And you might not think that that's related, but it is. And again, it comes back to, if you want to succeed in trading, you have to treat it like a professional, right? Think of an athlete. Tom Brady. I'm a Steelers fan. Tom Brady used to kick the Steelers' ass all the time. I couldn't stand him. But that dude worked hard. He studied film. He lived it. He breathed it. And when it came time for game time, sure, he had some losses because we're in trading. We're going to lose too. But he was successful because he put in the time. You have to treat trading and investing like a business. You have to be a professional, because here's the other part. In what other world can you click a button and capture money and do it from home and have your time freedom? And that alone, we have to treat as sacred. We have to honor that. We have to respect it. And if we don't, the market will humble us. It will kick your ass. It will kick your ass. And I can say that from experience because I got knocked out several times, right? And you have to be on guard against that. And the way that you do is by respecting the markets, humble yourself, and treat your trading and investing like a business. So that is the topic for number 21. And now it's time to take a look at Mr. Roku and see how he is doing here. And I'm going to make this a little bigger on my screen. And there we go. So we can see Mr. Roku here. We had a really nice day on Tuesday where he pushed higher and almost got to the most recent high that we made back on March 14th. But you could see immediately when that happened, the bears stepped in and knocked this thing right down. And currently today, it opened higher than where it closed yesterday. We were at 63.90, but it's just been getting pushed down. Now we are above that 50 50 simple moving average on the daily, which is good. So that's a good close. But we could see right above us is the 50 exponential moving average, which Roku hasn't closed above since, let me go back and see when the last time that was. Since, let's see here, February 15th. So it's over 80 days that that's happened. But the good thing is this double bottom pattern that I talked about last week is still intact right here. And we got above it yesterday. So this could just be a retest of this neckline and a setup for move higher. The one thing that I do like that I see here is that we had a decent amount of volume coming in. And today with the inflation report coming out cooler than expected, that's the first time that's happened in the while. This could be setting up for finally the move on Roku higher. Again, the first thing that I'm looking for is filling this gap here up until 71.12. But some stocks just take a little bit of time to make it happen. But I will say this, there's a lot of pressure down here. And there are a lot of bears down here. When this thing gaps up on its catalyst, because it will come, expect this thing to move fast and furious. So that is a look at Mr. Roku for today. And that is going to do it for episode number 21 of the Traders Podcast. My gratitude and appreciation to all of you out there for continuing to watch the show. I really appreciate it. I enjoy doing this, sharing my experience with everyone because this is how I live. If you have any questions, please reach out to me, drop them in the comments. It means so much to me when you like and subscribe to the channel, so thank you for that. And if I can help you with anything, please let me know, and I will see you back here next week for episode number 22 of the Traders Podcast. Have a great day, everyone.